In today's video, we're going to be having a look at the FOMC statements from last night. We're also going to be discussing gold and whether it's going to go up or down, and we're going to look at Black Friday and some options for the weekend. Hello and welcome to another ACY Securities Hot Topics video. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing I'm going to have a look at today is actually at the Dow Jones. Now last night I was having a look at this. I didn't get the opportunity. It was a little bit late in the session for me to be able to get a trade on it. But if you were up and a technical analyst, this is what you were really looking for. You've seen the Dow go into the 30,000 barrier. It's obviously had a very good run up for a number of days. And then right at the top, we get a head and shoulders pattern that plays out, which is genuinely a good sign for a little bit of a resistance trade that you could have taken. Of course, we're not sure if it's going to keep going down all the way, but it's not a bad place to get a few pip out of it anyway. So this is pretty much the epitome of your perfect trading pattern if you do get to find one again. Now, looking at gold, there are two arguments for gold at the moment. I've been asked a couple of different times by a number of different people about the idea of where do you think gold's going to go. We've obviously seen gold coming down in value. It's down at about $1,800 per ounce at the moment. And there are some calls from some banking elements and a few other tier one firms that are mixed in review. Some are saying that it's going to be $2,500 by 2022. Others are saying it's going to be about $1,600. So which way would we really fall on a trade like this? Well, I've got two trains of thought about it. And there are two arguments. There's the buyer's case for this and the seller's case as well. On the buyer's case side of things, where we're thinking about purchasing gold, we have low interest rates that are likely to hang around for an extended period of time. We also have record quantitative easing purchases or bond purchasing programs keeping yields lower. We're seeing stimulus packages getting hit all throughout 2020. And from a medium to long-term perspective, it's likely to mean that we're going to have to continue those purchase programs and have more stimulus coming through. But that doesn't necessarily we're going to see it. Now, we're going to be focusing a lot on the FOMC to see where the prices are sort of going to go for gold, obviously the US dollar and those bond, the 10-year treasury yields on them as well. The seller's case is a little bit of a different argument, and it's looking more at what's going on for the broader economy. Here we're looking at what the vaccines are not being too far off, and when they do get released, perhaps we're going to be looking at a world post-pandemic. So some of those things that didn't do so well throughout the pandemic are going to start moving up. People are going to move to that risk on or the riskier asset classes and taking into that rotation that we talk about quite regularly. So if we've got that sort of happening, then we might end up seeing yields move a little bit higher up. And then therefore, we're also likely to see that with the optimism of that, people decide to move into stocks instead of keeping it in gold. Now, is this a long-term perspective? Not really. On the seller's side, I feel is a little bit more shorter term. Obviously, it's going to be running with the rally of vaccine optimism. So we're going to have to keep a very close eye on what that situation. And of course, we're going to have to keep a really close eye on the Fed. Now, we had Fed minutes last night. I have got some thoughts about their direction, and it's really going to be accounting down to how they're going to deal with their asset purchase program and when are they going to start bringing rates up. Because ultimately, they're the two big factors from the Fed that are going to affect how we see the price of gold moving over the next couple of weeks. So take your time with your considerations on these. It's not like we have to get into them right now and then get a trade out of it tomorrow. It's about looking at the long-term perspectives and holding on to some of these positions for a while to try and get a full swing out of it. Now, looking at the FOMC minutes from last night, I do have a couple of thoughts about it. They did have the meeting back in November 4th, November 5th area, and the minutes have only come out yesterday. Now, what it shows on that at that point in time were that most of the members were quite mixed. Some of them were they were all focusing on the asset purchase program, but some of them were really thinking about whether purchases are going to be favorable, which was most of them, and they thought that, okay, we might need to modify or expand the asset purchase program. But we had a number that were disagreeing with that and thought, nope, we shouldn't really do that. Some of them were thinking that the limit's kind of been hit for what the Fed can do next. And I believe that's probably a bit of an effort to try and put a little bit more pressure on Congress for a bit of fiscal stimulus. And we had some of the extreme hawks thinking and looking at certain areas of the economy that looked like a little bit of a bubble market. One of the places that they focused on quite heavily was actually on property. So there are a number of different opinions going on at the Fed at the moment, which makes it a little bit harder to forecast whether we're going to actually get expansion to the asset purchase programs in the December month. Now, of course, we're taking into account this is before we've seen a vaccine. This is while we're waiting around Congress to get things through. It's just after the election. So they might have had a little bit of a different frame of mind than what they have today. So that's going to be an important factor for us to consider throughout December, and particularly if we're going to be looking at gold prices more regularly, but obviously it's also going to affect a number of other markets. So either way, we should be keeping a very close eye and tabs on what the Fed does next. Now, looking at Black Friday coming up, it's obviously Thanksgiving tonight for the US session, in Australia anyway, and we're going to be seeing Black Friday sales coming up very shortly. Now, I've had a couple of thoughts. I've been looking around. Usually when you look at Black Friday sales for US equities, particularly on e-commerce and retail chains, they do actually see a bit of a jump up. It's usually short term, but it does give us enough time to sort of anticipate how that company is going to finish up for the financial year. So if we look at what some of those things are going to be this year, more particularly than others, I believe we're going to see a lot of online retailers doing better than the ones that we see in the actual stores. So what we've seen so far from some of the surveys are indicating that more than 50% of people are more likely to be purchasing online instead of going into the stores instead. And one of the places that I've looked at quite heavily, I know it's an expensive stock, but Amazon. It's positioned well. They've spent a lot of time this year investing in the logistical sides of how they actually get products out to people. So this is going to give them a little bit of an edge when it comes to their supply chain management. Obviously, it's going to give them a little bit of an edge when it means having those goods available for people and getting them to people in a timely manner. So we might expect to see them rise up in value. There are a number of other companies you could look at, Dick's Sporting Goods. You could also look at things like Target, Walmart, Best Buy, as options to sort of consider about how we might be looking over the Black Friday sales period. The biggest issue with Black Friday and Christmas sales is it's very difficult to pick an individual item that's going to be doing well that year. So it's kind of harder to pick that, oh, maybe the new iPhone is going to do the best, so we should invest in Apple. That's not really, that's kind of a disadvantage to the seasonal impact that we get at Christmas and on Black Friday. But what we can do is look at the companies or the types of businesses that are likely going to be doing well. So look at your retailers, look at things like Amazon, and get a bit of an idea of a gauge on where we might be going. Now, Cyber Monday is also going to be a busy day because of obviously the sales that are connected to Black Friday there. So expect to see a lot of demand around some of those hot topic items. But of course, it's always going to be something interesting no matter what we do over the weekend. We've already heard more from AstraZeneca and there's been some disagreements on their vaccines as well, so there's a lot of news always to go through. Now, looking at the news ahead of today, it's a pretty quiet day. We have German consumer climate or consumer confidence reports coming out. We have money supply, private loans, and a number of bits of information from the ECB coming out later in the session. We're also going to be obviously having the Thanksgiving holiday, so expect the US session to be quiet tonight. Though having said that, if you were to pick the quietest day of the year being Thanksgiving, chances are it's probably got more trading volume than most of the days in 2019. So there is still lots of action to have. Now, if there's anything from today's video you'd like to get in contact with me about, please feel free to shoot me an email at talktoal@acy.com or get in contact with me through any of my social media channels. They're all available for you to do that as well. Now, don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.